welcome to Market Open Direct Connect, a webinar series for companies to tell their story, why it's compelling and why it's an opportunity to invest. I'm your host, Stewart Walters, and we're joined here today by Andrew Reid, Managing Director of Brazilian Critical Minerals, ASX code BCM. Andrew will run through a company update, also the results of the scoping study, and will participate in a Q&A with attendees. Attendees will have the opportunity to ask questions, and you can submit those questions via the Q&A tab at the bottom of your screen. A recording of this webinar will be available on Market Open and BCM's communication channels within the next 24 hours. It's time to introduce our guest, Andrew. Welcome to Direct Connect, and over to you.
Great, thank you very much, Stuart, and good morning, afternoon and evening, everybody, wherever you are in the world, and welcome to the webinar. We're really excited today to present you the results of the Ema Rare Earths Project scoping study. The format for today is I've got about 20 minutes to walk through the presentation, then we'll have a 10-minute Q&A session at the end. The company has been developing the ISR, or the In-Situ Recovery Rare Earth Project, over the last 9 months. In-Situ Recovery has some very strong advantages over traditional mining techniques in the fact that it doesn't require mining and drilling and excavation of material. And in fact, in the rare earth sector, in-situ recovery is actually really quite common, being used for the last 20 years throughout China, Myanmar, Malaysia, Laos, and Vietnam. It's just not that common in the Western world. So I'm going to run you through the results. We've got some really exciting news. We've got an ultra-low capex and an ultra-low opex production. Just the disclaimer here to make sure that everybody's up to speed that these are scoping study numbers. Here is the project location. The Ema Project is located in the state of Amazonas. It's in the southeast portion, about 30 kilometres away from the town of Apui. Apui is predominantly an agribusiness region. Its main livelihood is cattle farming, and the Ema Project area is substantially cleared for the purposes of cattle farming. Our peers, which have some great projects in the southern part of Brazil, have a very different type of projects to what we've developed at Ema, and they've also recently released some scoping studies. The main advantages of the Ema Rare Earth Project is really the similarities physically and technically to a lot of the large Chinese rare earth projects. We have mineralization that's very close to the surface. The bulk of the high-grade material sits directly above the bedrock, which is encountered no more than 15 or 20 meters below the surface. The hydrology is such that it allows for the permeability of water and solutions to move up through the clay profile on an annual basis in the rainy season. So all we have done with our ISR techniques is to take advantage of this natural conductivity in the ground. We've been and have achieved some significant recovery results, which are outstanding and industry leading, which we've published over the last 6 months or so. We are one of the leaders in the development of using magnesium sulfate as a lixiviant, as opposed to ammonium sulfate. Magnesium sulfate is a lot greener and a lot more environmentally friendly. On the right-hand side of this slide, you can see that for an ISR project, we really eliminate substantial cost centres in any mining project. There's no excavation, there's no open pits, there's no dump trucks, there's no mining equipment per se. The processing plant is quite small, and there's certainly no need for any reclamation at the end of the mining process. All of those cost centres are completely eliminated with this process that we are developing. This is what the process flow sheet that we've developed through the scoping study looks like. It is very simple, very straightforward. It's simple, effective, and like I said, it's actually very common in the rare earth sector. We essentially do step 1, which is the in-situ, the ISR portion. Once we get the rare earths into solution, it's then pumped to phase 2, 3, and 4, which is all above ground, and you can visualize that in the picture on the right-hand side. We remove all the impurities, predominantly aluminium, iron, and silica. We then precipitate out the rare earths, And our final product, of which we only produce one product for this project, is called an MREC, or a mixed rare earth carbonate. And you can actually see the bags of the mixed rare earth carbonate under this particular shed where my pointer is at the moment. So this is a very simple project. It's very light on capex because there are essentially very few moving parts in our process. There's very limited mechanical equipment. This is predominantly a civil and earthworks type processing plant setup. Here are the headline financial numbers, and in terms of rare earth projects, these are really quite outstanding. Just starting on the left-hand side, our annual production, we're going to produce somewhere around 8,700 tonnes of MREC on an annual life of mine basis. You can think of that as really a super high-grade concentrate, which contains about 55% rare earths, of which we average about 4,800 tonnes of TREO on an annual basis. And inside of that 4,800 is about 1,800 tonnes of the magnetic rare earth oxides, which are the key 4 elements which produce most of the payability for this project. As you can see, pre-production capital is sitting at 55 million, and importantly, this already includes a 35% contingency. We've developed a 20-year mine life, and that's only within the starter area of our project area. Our cash costs are industry leading and some of the lowest that have ever been achieved for any rare earth project at this particular phase of study. We're sitting at just over $6, $6.15 per kilo of TREO, and of course all these numbers are in US dollars. Cash flow is very strong for a project of this size, and the NPV post-tax at our life of mine basis rate is sitting at 498 million. Okay, so very strong NPVs. If we use and look at the NPV post-tax at the current spot rate, which is about $60 a kilo of NdPr, then you can see that IRR is sitting at 52% and at 55% for our base financial case. All of that leads to a very strong payback period of just 2.4 years. In terms of our operating and capex expenditure, I mentioned 55 million. There is no other rare earth project on the planet that I know of today that can come online for 55 million US dollars. Our life of mine sustaining costs is very small at about $1.6 million per year. And that is really because there is very few moving parts and mechanical needs for this particular type of processing plant. It costs us about $29.4 million, $30 million to run this particular project on an annual basis. Our operating cost, $6.15, and the all-in sustaining cost is very low at sub $7 at $6.69. So all of that leads to very strong margins, very high profitability, and a project that's currently unmatched for these type of financials anywhere in the world today. The capex distribution. Here is the breakdown of the 55 million. I won't go through all of this slide, but this is a very simple, low risk, quick to establish project. I showed you the picture of the process plant on the previous slide. Here on the right hand side, this is essentially what we will be building, and this is where a substantial portion of the $55 million will be going, and our project will look very similar to this particular picture. And of course you can go to the website with the link at the bottom of the particular slide. In terms of our cash flow, the 55 million, it's obviously very low. We've run our financials at 2 pricing levels, one at the life of mine pricing level at just US $74 per kilo of NdPr. Again, there is no rare earth project that has released a scoping study, feasibility study, or any other study in the recent years which has generated cash flow positive results at $74. And you can see even at the current low depressed pricing of $60 US per NdPr, you can see that the project certainly still is very strongly cash flow positive. The life of mine NPV 498 million, and then 355 million post tax at the current spot level. The reason we generate very strong cash flow is again because we have very low OPEX and very low CAPEX, and this is the result of the unique attributes of the ore body and the fact that we're employing this ISR technology over that particular set of mineralization. Here is the breakdown of our mineralization. The breakdown of our operating costs in US dollar terms, and you can see that the $29 million that it costs us to run the plant, most of it is sitting in the variable component, which is predominantly reagents, power. The fixed component is predominantly labour. And of course, we are sitting in the southeast part of the Amazon, so we've fully costed in transportation, CIF to particular ports in Asia. Again, these results allow us to generate extremely low operating costs of $6.15 and $6.69 in TREO terms. In terms of the more widely accepted industry metric of operating costs in NdPr terms of $16.95, I don't believe there's any other project that I know of that can produce a kilo of NdPr at those sort of rates. So we have a very strong, robust project, and we've been able to generate a very strong set of financials through the scoping study process. On the left-hand side is our annual production profile. I mentioned that we'll produce about 8,700 tonnes per annum of MREC. We only produce one product, and within that, it contains 4,800 tonnes of TREO, and inside of that TREO is about 1,800 tonnes of the magnetics, what we call NdPr, Dy, and Tb, and they certainly account for about 90% of the revenue that we will generate over the life of mine of the project. On the right-hand side, you can see the cash cost curve from 2024, and you can see where Brazilian Critical Minerals, the Ema Project, will sit. It will be the lowest or one of the lowest projects of its kind ever to come into production once it's developed. So we sit at a very, very nice sweet spot in terms of the cash cost curve. Again, the key financials, annual revenue sitting at 143 million, 180 million over the life of mine at the $74 mark. It generates very strong revenue over the life of mine over the 20 years. And of course, also we get a very strong cash flow of $900 million or $1.3 billion over those differing pricing levels as well. On the right-hand side, again, the 355 million NPV at spot, 498 million at life of mine, generating quite exceptional IRRs of over 50%, payback at just over 2 years. And the capital efficiency, because the capex is so low, we really knocked this out of the park. You know, we're sitting at 500-600% capital efficiency, which is really unheard of for a rare earth project. On the bottom right-hand corner, you can see the pricing levels that I've used in the financial assessment. The current spot price is sitting at $30 a kilo TREO, which is equivalent to $60 NdPr inside of our basket price. And that has been escalated by 30% to $37 and $74 a kilo, respectively, at year 5 only in our financial model. So the first 4 years of the life of mine model is fixed at the spot rates. Okay. What we did with this particular slide, we subjected the financials and the project to a number of stress tests. We've dropped the price. We eliminated any price escalation. We looked at what it looks like at spot price. We then escalated the operating cost by 50%, and then we escalated the plant capex by 50%. You can see the numbers listed there in the table. The NPVs at each of those different scenarios still looks quite amazing. And really, this project is highly insensitive to big increases in OPEX and CAPEX because the starting positions at those levels is already so low. And the IRRs at each of those different scenarios remains extremely favourable. And again, you can see that the capital efficiency on the bottom line is very, very high as well. So I think the takeaway here is that under every stress scenario, this project remains extremely cash flow positive. A quick comparison of our scoping study relative to the other 3 scoping studies that have come out of Brazil inside of the last 12 months. You can see the BCM column highlighted there. I think, again, the takeaway is that our CapEx at 55 million is remarkably lower and multiples lower than any other project that is looking to come online and be developed inside of Brazil and respectively outside of Brazil. Our operating costs, both in TREO terms and NdPr terms on the second and third last rows, are very favourable relative to our peers, and we think that these are some of the industry-leading results that you will get. And really all of that combined together results in very high NdPr and IRR results. This is what the comparisons look like visually. Starting from the left, you can see this is really our C1 operating costs relative to the other 3 studies. You can see that we've got some of the lowest operating costs in the sector. In terms of all-in sustaining costs in the middle there, you can see we're best in class and several kilos cheaper than some of our peers. And in terms of CapEx at 55 million, I've already mentioned that we are multiples lower than any other project that's anticipating to come online in the future years. In terms of all-in sustaining costs and in terms of the pricing we used, if I start with the dotted line at the top, this is the visualization of the life of mine pricing structure. As I mentioned, the first 4 years, we remain at spot. We then only jump up the price forecast in year 5. This is really as a result of commissioned price forecasts from several different providers, which show that there is an increase post 2030 for rare earth pricing. Okay, the bottom columns are again the all-in sustaining costs in NdPr terms and TREO terms relative to those revenue pricing levels that we hope to achieve, and you can see that they're very high margins and very high profitability that this particular project can get. Because we're in the state of Amazonas, we are eligible for very cheap corporate tax rates over a 10-year period, and we've applied a 15% corporate tax rate to the first 10 years and 34% to the remaining 10 years. In terms of REE prices, these are the C1 costs, the life of mine, and the spot price we get. At the life of mine price, with the dotted line represents the 489 million post-tax NPV, and then the 355 million is a result of post-tax NPV as a result of the $60 per kilo NdPr that you can see highlighted in the central portion there. So again, this project is not required to have elevated REE prices to generate strong returns, and the life of mine price of $74 is extremely low and somewhere between 25 to 50 to 100% lower than most other rare earth prices that are used in scoping studies. We have a very large resource base. We just put out an updated MRE just last week. As part of the scoping study, we've only been looking at the central starter area. We have 341 million tonnes of mineralisation within that central starter area. The average grade is 746 ppm, but we have something like a 1.3 billion tonne global resource. So we have a lot of opportunity to upscale this project and to add multiples of projects inside of the mineralisation that we've already defined. And I think importantly, inside the central starter area, the indicated portion represents a very high 73%. This is really a visualization of what the in-situ leach technology looks like. It's very simple. The topography around a Pui is quite undulating. It needs to be able to use ISR in rare earths. What we do is we drill a series of very close-spaced, very shallow holes, probably no more than 5 or 6 meters deep. We then inject the lixiviant, in our case, the green magnesium sulfate, into that. It leaches down through the profile where you can see the highlighted brown area in the center of this particular picture. Then the lixiviant on the magnesium sulfate then liberates the rare earths into solution, where then the rare earths is captured in these cut-off trains downslope, and then is pumped to the processing plant, as I've already explained. The reason that we can do this at Ema is because we've got suitable topography. As I mentioned, we've got the impermeable bedrock at the base where we can collect the solution. We have, importantly, a high proportion of quartz or silica in the clay, somewhere around 50%, which allows the solutions to move through the clays quite easily. This means that we don't have a lot of volume of big, thick, heavy-set clays, which can clog up solutions, and then also the amount of pore spaces that we've got, or air spaces in between the clay particles, is obviously is allowing and suitable for allowing the solution to pass through this type of material. So as I've mentioned there, this is decades old technology. As I've already mentioned, it's been in operation in many sites around the world for 20 odd years. We're only using green reagents here. It's just the natural gravity of the system to act as our pumping. And all we're doing is accelerating these natural processes that already exist in the ground through the wet and dry season in Brazil to attenuate and put the rare earths into solution and pump them to the processing plant. This is our basket price relative to some of our peers. You can see down the bottom highlighted here. This is the potential revenue that we could generate from a kilo of TREO. Again, this is industry leading at over $30, $31. And these are of as of prices that were generated on the 12th of February compared to some of our peers. And as I've mentioned, the MREO or the NdPr DyTb portion is very strong with this particular project and represents 90% of the total basket value, which is extremely important for being able to generate a positive economic project, as we have done. Last slide here. I think we've developed and we've delivered on everything that we've said we're going to do over the last 9 months. We've got a very large resource. We've got key attributes to our geology, which no other project has, which are similar to some of the large Chinese projects, which are developed and now being mined at some of the cheapest rates anywhere in the rare earth sector. We've got ultra low NdPr costs of production, which allows for a highly profitable project. Our capex is some of the, if not the lowest anywhere in the world for a rare earth project at $55 million US. It's an order of magnitude and multiples lower than most other projects. And really that is driving a very strong and high NPV with an outstanding IRR and a payback period of just over 2 years. Okay. These are our key contributors, and I would just like to say and finish off by saying that all of the work in the scoping study was independent of BCM. We were a contributor, but all of the cost build up and results that we've put into the scoping study were done by others. Okay, thank you very much, and over to you, Stewart.
Andrew, thank you. Fantastic presentation. We have had a series of questions come through, so we'll get straight onto those now for you. How does ISR compare to conventional rare earth mining methods in terms of environmental impact, cost savings, and efficiency?
Yeah, look, I think ISR, I think is the new future. I think everybody in the mining sector is looking for greener, more environmentally ways of extracting commodities, and this is certainly one. Like I've mentioned, there's no mining, there's no open pits, there's no disturbance of the land. We've been able to combine that with the use of a very green reagent called magnesium sulfate. So our project is very highly ESG compliant, and also we've been able to eliminate a lot of the cost structures that you typically get in more traditional mining methods, right?
With a pre-production capital expenditure of only 55 million US, how does BCM plan to fund the development of the Ema project?
Yeah, I think what we're going to do now, Stuart, is we're going to obviously start the marketing phase of our project. We've got some strong interest in offtakes. We need to start to put those conversations to bed over the coming weeks. There are a number of opportunities for financing. We have to look at all of those sequentially now because our capex is so low. It will open up a whole bunch of new opportunities for us, and we'll start to have those conversations immediately.
Andrew, what are the key risks associated with ISR mining at Ema, and how does BCM plan to mitigate them?
I think the key risk is with any ISR project is around the permeability. You need to have the right type of clay, the right type of clay mixture. We've defined that already. We've got nearly 50% silica. We've done a whole bunch of field trials already at the Ema project. We are over the coming weeks going to complete a full pilot plant field trial, and the results of that will be really telling about not about the permeability, but more so about how quickly we can leach and extract the rare earths out of the mineralisation.
Can you cite examples of ISR for rare earth mining, and what are the differences to ISR mining and processing of uranium?
I think there are certainly key differences. I think what is similar though is that ISR and uranium is very common in Australia, in the US, in Europe, and I believe that those rare earth mines are some of the most profitable, as they are for ISR mining in rare earths. I mentioned China, Myanmar, Southeast Asia. There are many examples. There are many operations there. There is something like 30% of the world's rare earths that are currently provided through ISR rare earth mining.
What are the taxes and royalties on the project, and how does that compare with the likes of MEI and VMM?
Look, in terms of BCM, I think we're very lucky that we're in a region that enjoys tax concessions. Those concessions are there really to incentivize projects like ours to get online and get into production. We enjoy very strong support from the government of the Amazona and very strong local government support from the town of Apui. And we believe that we will certainly be able to second the 15% tax incentive that's available to us. There are other parts of Brazil where this 15% is also available. I'm not familiar with all of the regions, but the mainstream corporate tax rate sits at 34%.
Do you have to trial ISR mining before going to commercial scale?
Not necessary, but it's certainly preferential, and that's why we are looking at doing our field trials over the coming weeks. We have already drilled our holes in the ground. We've actually purchased a lot of infrastructure. We are just now finishing off the purchasing of some of the other remaining consumables. We've engaged a specific team that is going to go up there and run our field trial for us, and we will certainly be on the ground there producing product in the coming weeks.
Can you talk about any potential customers or where the material is likely to be sold?
Look, I think we enjoy a number of conversations over and across a number of continents right now. I won't be specific about where those particular customers are, but I think that because we've got a simple, effective, a cheap, low capex that we think that can be built and brought online in a relatively small amount of time relative to our peers, this will start to generate some key advantages to us, and we believe that they will translate into some of the conversations we're having with off-takers.
And where is the company at along the environmental approval process to begin the setup of the processing facility?
So we started our environmental baseline assessment in the middle of last year. We did a lot of the dry season environmental work. It's currently the wet season up at Apui at the Ema Project. So the team is on the ground now collecting all the data. They'll finish that over the coming weeks, and then we'll be able to wrap up our environmental application and submit it to the government.
Has Fields ISL testing occurred at Ema?
No, it hasn't, but it will happen over the coming weeks. We are very advanced in that area right now.
What are the next major milestones investors should watch out for following the scoping study?
I think the results of the field trial, which is essentially the equivalent of a pilot plant for more traditional types of mining, is key for us, and those results are really important. We've also been doing some similar type testing here in Australia ANSTO, and we hope to get those results out to the market shortly as well. So they're the key next milestones. We'll then sit with our service providers that really supported and put together a lot of the work in our scoping study and map out the plan for the coming year with respect to the next phases of our studies.
Andrew, what effects does the wet season have on the project?
The wet season can actually help with the leaching, because what you actually want is you want a certain amount of volume of water in the ground to be able to push through. It acts like a head. It acts like a heavy weight, which actually can push the magnesium sulfate through the ground. So the wet season effects that we've modelled are actually slightly positive to the project.
There's another one that's come through here, the last one. How does BCM's Ema project compare to the Brazilian or other Brazilian rare earth projects in terms of economics, resource size, and development timeline?
Look, I think here's a summary of the key financials that the big 4 rare earth ionic clay projects have put out over the last 12 months. You have to go to their announcements to look at the timing of what they're trying to achieve with coming into production with their own timeline. But I think the yellow highlighted column there around BCM really stands for itself in terms of the NPV that this project can produce post-tax. The IRR is simply stunning and sensational at over 50%. The capex level of $55 million US is unheard of, and the operating costs are sector leading. So I think this project stands by itself. It now can generate a good amount of rare earth product, and we certainly look forward to moving the Ema project closer towards production and development.
Whilst you're talking then, we had two other questions come in. Once you've obtained finance, how long does it take to build and then commission the plant?
Yeah, look, we haven't gone through the detail of that at this stage. Obviously, we've been focusing on trying to get the scoping study out. Look, anecdotally, some of these ISR projects in rare earths have been built in less than a year. So they are very quick and very easy to build relative to other types of rare earth projects. And that's predominantly because, as I mentioned, our particular project is predominantly civil and earthwork related, right? So those activities tend not to take that long a period.
How long will it take to obtain environmental permitting once lodged? Are there any other approvals required, and what is the estimated timeline?
The environmental, once it's submitted, we anticipate we'll get a response back within 12 months at this stage, which is the typical timeline for receiving a project for any mining project in Brazil.
Is there a timeline on expected first major offtake to be signed?
I can't put a timeline on that. Let's just say that we've already had a number of ongoing conversations with off-takers over the last 6 to 9 months. I wanted to wait to put and publish the results of the scoping study out before we finalise any agreement. So now that this is in the market, we will endeavour to push through with getting off-take agreements.
Andrew, thank you. That's all that's come through for today. Some great questions, some outstanding results from the scoping study. So thank you for being available for that. For more information about Brazilian Critical Minerals, you can head to the company website, braziliancriticalminerals.com, or you can follow the company's social media channels and Investor Centre. Once again, Andrew, thank you so much for presenting today. Thank you to the attendees. Have a great day, everybody, and look forward to speaking again soon.
Thank you. Thank you very much, everybody.